please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The market is at the low point of the day, as we've been telling you for some time now, and most indices now are at the low point actually. And take a look at the mid-cap index now. That is approaching, in fact, that's now down more than 1%, 1.1% is what's gone in case of the mid-cap index. Let's actually focus on the market flashes now, though that DRL news is not really that important. Prakash Gaba and Mitesh Thakkar now join us with some BTST calls, buy today, sell tomorrow. Mitesh, you go first. On index, would you take any positions home, and what would be your stock calls?
Yeah, so I think the Bank Nifty could be interesting. The Bank Nifty has broken down that support of 24,600. I think now keeping a stop just at about 24,650 can be shorted for declines to about 24,200, 24,150 kind of zones. And on the stock side, I have two sells. Century is a breakdown case. I think the stock has been declining for the last few minutes. Now can be sold with a stop at about 1198 for targets of 1150. And a STBT called on Dabur, which is breaking its 200-day average. So that's the STBT. Keep a stop at 324 and look for 313 kind of a target.
And before I go to Prakash for his calls, just want to pull up some intraday charts to see the kind of drama that's going on. Let's get you HUL intraday, Reliance intraday, maybe even a Wipro or an HCL Tech. There's just tremendous amount of volatility on these stocks. Now, Anuj, I don't know what that would be, whether that's someone covering short suddenly. I don't know if that would be any sign of fresh buying at all. On the other hand, something like an L&T, again, moving towards the lows of the day. But on IT, suddenly there are these big spikes that are coming in on a couple of stocks.
That's an interesting trend that you're spotting up, Surabhi. Larsen moving to the low point. Look, as we discussed as well, for now, let's take it each step at a time. Today, I think the market has really overreacted. I mean, absolutely no doubt in my mind about that. But then, let's see the numbers, the institutional numbers, and whether that changes things on Monday. For now, there's a good chance that once again you take support at 200-day moving average and you move on, and the market makes a classical double bottom or moves on. Otherwise, I mean, perhaps this time you have to go lower than 10,000. But just one point that I want to make. All through last year, everyone's view was that we want a correction to buy into the market, and that is exactly what happens. When you have a bigger correction, somewhat bigger correction, you believe that this is end of the bull market. You don't want to buy. You make most money when you buy into bull market corrections, right? I mean, of course, has the thesis changed and all of a sudden it's not a bull market? I mean, I'm no expert to tell that, but if your overall view is that this is still a bull market, in that case, corrections are buying opportunities, especially for investors. From trading point of view, of course, you have to respect the screen, and the screen right now is telling you that there's some problem. Let's see Monday, I think, if we hold to 200-day moving average or not. For today, at least, hope is that in the next 17 minutes, at least you won't have that kind of fall, and that you will protect that mark for sure.
Yeah, absolutely. I think thanks to the kind of resurgence you're seeing on some of those stocks, the IT pack as well as RIL, we're not exactly getting to the 200 DMA right now, though banks have gotten exceedingly weak. That's the afternoon for you, Prakash. What do you make of all of this and the ideas now?
I feel it's weak. Closing on a weak note on a Friday is not very comforting. To me, that's bad. I have only one stock, that is GAIL. Can see a slide to levels closer to 430 zones. I think GAIL is going down. Stop about 450.
Okay. Let's move on then. Let's get an insight into dealing room chatter. Nimesh Shah is here with Trader Talk. Nimesh, worst performing market today in India. What's been the feedback?
Yes, Anuj. So, again, it looks like the 2 p.m. factor is played out again in today's trade. We've been saying this for the last few days. A lot of dealers are looking at the 2 p.m. move very closely. What I've understood or what I've gathered from the dealing desk is there was a strong rumor of a long, structural product getting unwound at a certain level on the Nifty. So that probably could be a reason for a big disruption in the large cap names. If you look at the volumes of the cash market, they're still very thin. So, the fall is not on very large volumes, and it's very concentrated on some of the large cap names. So the top 30, the top 10 or 12 stocks actually contribute more than 50% of today's fall on the Nifty. So that's the kind of feedback that I'm picking up. Again, the Nifty is back to the lower end of the trading range. So we need to see how things pan out from here. But again, everybody is now looking at the 200 DMA very closely. If that gets taken out on the downside, then it will open up a big fall for the Nifty and for the Bank Nifty. So that's a big worry which a lot of dealers have been talking about. In terms of delivery, there is some bit of buying coming to select large cap IT names, but barring that, it's essentially more of unwinding of longs in the large cap names. The biggest worry for the dealers, at least in the near term, is of course the year-end adjustments and the fact that there are 3-4 large IPOs coming in, which can probably suck the domestic liquidity to some extent. So that's the reason why there is not much buying interest coming in from the domestic investors as well. So that's something to worry about the domestic liquidity. So net again back to the lower end. If we break 200 DMA, then probably we'll see a big sell-off in the Nifty and in the Bank Nifty.
Okay. All right, Nimesh, thanks very much for that. So that's the mood on the street. Some more stock moves for you. Titan is trying to show some signs of life, so it's just turned positive right now. On the other hand, you have the likes of, so that's a move on Titan. That's one worth looking at, perhaps. And on the other hand, you have a stock like NLC. Suddenly, there's a big slam dunk. It's kind of fallen off the cliff. So it's all kinds of moves beyond the Nifty 50 as well today.
Yeah.
Yeah.
Also, yeah. Just look at Ajanta Pharma's intraday chart. Just pull out that stock out of nowhere. Big move on that stock in a weak market. That stock is now trading at the high point, 2.7% higher on Ajanta Pharma. I don't know if there's some news to it, because normally some of these these kind of moves happen with a bit of a news flow around them, but 3% move right now on Ajanta Pharma.
Yeah, so quite a bit of individual stock specific action obviously all over the place. Let's get you more market opinion then. Earlier in the day we caught up with Andrew Holland, CEO of Avendus Capital Alternate Strategies. We got his sense on the market in light of the imposition of the LTCG tax and of course the PNB fraud that has roiled the street over the last couple of weeks.
A lot of those PSU banks are not in the index, so I think I don't think that's a real reflection of where the index is. What I would say is that we haven't recovered as much as most, and despite that, we're still one of the in terms of valuations amongst emerging markets, still one of the highest. So you can look at it on the bright side if you like, but I think we got helped a lot by the global recovery in markets rather than we kind of came through it unscathed. So I wouldn't go that far in terms of that thinking.
Would you go the other direction? We had Ramdev Agarwal telling us that it'll be a slow grind for this market over the next year or so. Do you think that's possible because of these headwinds, political and others? Over the course of next year, I do expect markets to move up in line with earnings growth, and we're expecting earnings growth at this point anyway of about 15%. That's 15%. But the short term, the risks are piling up, and I know you spoke about them many times, but notwithstanding Trump and what he's going to do in terms of trade barriers. The core inflation in the US is picking up quite considerably now, and I think the worries about interest rates and how many we have or how big they're going to be in the US, I think will come back to us in March. So I don't think we're out of the woods yet in terms of the global volatility, and I think that's something which I think could. We have no real support here for our markets in terms of what's going on in the banking system, but also we're going to have to wait for those earnings to start to pick up. So slow grind in terms of, yes, maybe for the year, but in the short term, the risk still remains on the downside.
You are sounding a bit negative today. Is it because we lost in the Champions League as well? Now no more trophy to chase, only perhaps FA Cup?
Yeah, it certainly hasn't helped my mood, but I'm thinking about who's left in the from the UK or from England, and that makes my mood even worse. No, it's just that I think short term, Anuj, more seriously, is that there are still kind of headwinds out there which the market's tending to ignore at the moment. But whilst a lot of the markets have recovered, it's interesting that the Dow itself never recovered to the highs in January. And that doesn't bode well. So, I'm just expecting more volatility in the short term. And unfortunately, for our markets, there's no real catalyst to move us higher. So we might be in a range for the next few weeks until, maybe the global markets deliver us a little bit more on the downside. So that's really where I'm thinking. It's nothing untowards towards India. It's just more global.
Where would you hide? I mean, or not hide, which might be the leaders of the market, the outperformers?
So we've been, as you say, quite rightly actually, hiding in IT, hiding in FMCG, hiding in the private banks to some extent. Those are the three areas which we continue to kind of like. The reason we're not putting pharma in there is because of the problems that the sector still is seeing, and the margin pressure you're getting from the US. And I just think it's going to get worse for the pharma companies before it gets better. So, I would say IT and FMCG is the best places to hide at the moment. And you're getting, reasonable growth from FMCG at least.
I just wanted to ask you one more point about the public sector banks. You mentioned it in passing in your first answer. Is this now likely to be a growth headwind? Not having enough capital and this overall scare, asking every failure to be checked whether it's a fraud. Is this going to have growth repercussions? I
think what will happen is that the private banks and other, kind of NBFCs will just take over the market share from them, and they'll just be saddled with poor cash flow companies. So, when we talked before, even after they talked about the recapitalization, I said that they continue to lose market share. They will continue to lose market share even with that. Now it's really kind of mending all the fences, which the PNB has exposed, and that's just going to take a lot of time, a lot of effort, and again, no one's going to be stepping out to do lending, so someone's going to take up that for them, and that's going to be the private banks. What it could do, though, is obviously, push up rates in the very short term as well, because there is going to be a scramble for working capital.
So some recovery in tech, as well as the likes of RIL, have spared the blushes. At least, let's see if we can get a close above 10,200. We also have Prakash Diwan now joining in the conversation. So, Prakash, not been a great week for the market, not been a good Friday for the market. I want to get specifically your thoughts on IT and whether you would recommend a buy on either side, mid-cap or large-cap.
So, Survi, I understand. I mean, the market has had this, we started off the week with a positivity which was borrowed from the international markets, particularly the US markets, but it really didn't find, any sustenance because we didn't have triggers to keep things going in a positive way. So I think the market has come back to its reality check of looking at earnings and seeking inputs from there. But on a stock-specific bottom-up basis, I believe IT also offers a lot of opportunity. So does fertilizer. So look at a Chambal. I doubt if it's lost even more than 1% today. You look at IT, Tata Elxsi, some of the mid-cap IT names that I've been talking about. Look at a Sonata. So there is definitely enough value in these markets also that you'll find. But you'll have to be very choosy, very picky. There's nothing across the board as a sector that's looking very promising that you could kind of buy into it. But selectively, even in banks, even in fertilizers, even in autos, I think there's definitely opportunity and enough work that people can do.
Prakash, good afternoon. Oil marketing companies, they had a rally and now that rally is fizzling out. You think good opportunity to buy or would you avoid it?
No, I think they will slip a bit more, but I would not want to stay away also. For the these, of course, you have to take this with a pinch of salt. We all know the regulatory changes and the kind of M&A wave that has come into this whole sector after the ONGC HP deal. Is always, got some headwinds which create some doubt. But at some stage, you would start looking at, for example, IOC Com bonus was a great opportunity. I mean, so there's nothing wrong with buying this with a slightly longer-term perspective, especially with a mix of marketing and refining. That combination really works well for some of these plays like IOC, BP. So I wouldn't be averse to buying, but right now probably the mood is not very great to dip into OMCs at the moment.
Prakash, slightly tough question. One of the stocks that you've liked in the past, but it's still tough going for Tata Motors. Fresh 52-week lows coming through. Yeah. It's just not working, just not falling in place. Your thoughts now?
Yeah, so, from the time that we spoke about this 2 quarters back when they presented the howler of a number, we've seen them lose a lot, the Tata Motors lose a lot of ground. But I think, Surmi, it's a company that's in the throes of a very major transition in terms of its own business model. Yeah, so let's face it, it's not going to be a very gradual move up and things would change visibly. You would have more tectonic, more mutational changes in the entire trajectory of growth. So a couple of good things working for them could take things in a very different direction positively. For example, the electric vehicles, the hybrid buses that they've launched for the BTST in Bombay. Now, if that kind of takes off and they start scaling up, you have a new revenue stream to look at. So competitively, they would get certain advantages, which probably JLR is letting them down in certain markets. But the passenger and commercial vehicle business could, start looking up. So I still believe it's a company that's, yes, in the throes of transition. There are going to be these labor pains of sorts. But I'm still hopeful that they will come through this and have some sort of a, re-rating in their favor, which happened to Tata Steel after a long time. It could probably take some more time, but Tata Motors would still be something I wouldn't lose faith on.
Okay, all right. And not losing faith is something that maybe we can try and say for the market right now, because at least it's not lost ground below 10,200. The closing, adjusted closing, perhaps is going to be just above that level. But Anuj, what's the takeaway? Yes, there was some buying or maybe covering of shorts in RIL and stocks like, Wipro, HCL Tech, etc. But where does this leave us, this kind of a Friday close?
Towards the end, there was quite a bit of, as you said, Reliance, a couple of other stocks. If you look at the Nifty futures, Surabhi, the low was 10,197. And from 10,197, the closing rate is 10,242. So there was a 50-point jump on Nifty futures, futures that I'm talking about. That is where you trade. And look at that Nifty futures premium. That's gone up a lot in last 10 or 15 minutes. Now, I know it doesn't help much, but there are two possibilities. A, there's just aggressive cash market selling. And that's why, futures rate maybe is not impacted as much as cash market. But perhaps in the last 10 minutes, there was a trade which was taken that could this be a bit of a case for double bottom, the market going to 200-day moving average and moving on from Monday. I think we'll find out. But yes, it looks ugly, but it was down, Sensex was down 550, 560 at around 3 o'clock. It's going home with about 400-point cut, 430-point cut. So I mean, I'm not saying that it was not a bad day. It was a bad day, but perhaps it was not an ugly day as it looked like. At 3 p.m. Towards the end, there was some buying in some pockets, IT for sure, and also Reliance and all. So let's see. But perhaps we'll find out on Monday if the market is holding on to the lows. But for whatever it's worth, since it's down about 140 points, let's talk about the losers. And there were quite a few actually. And it's not that one or two stocks are down a lot and that's impacting the market. And if you take a look at some of the index heavyweights, Tata Motors down about 4%. Yes, I mean, that was a big one. Sun Pharma was down about 2.6%. But then you had stocks like Baruti, which was down about 1.6%, and HDFC down about 1.6%, ITC down 1.5%, TCS down 1.5%. Infosys down about 1%, HDFC Bank down 1%. So a combined effect of all of that was enough to lead the market lower. On the way up, of course, you had IT stocks, so Wipro, Tech Mahindra, HCL Tech were all higher, and Mahindra was also higher by about 1%.
Okay, on the mid-cap side of the market, the stock that I was really focusing on was NIIT Tech, because after its dream run, today was a day when we really saw some profit-taking take shape on that stock. So we're looking at a loss of almost 6.5% on NIIT Tech. Of course, it wasn't alone. Got lots of other names on the downside. Couple of the real estate names like Oberoi Realty losing 5.5%. There's been some selling on a Kolte Patil. We're talking realty. Let's pull up HDIL because that's the big negative headline coming out of course, Mumbai and talk of this fraud. Not too much price damage today, though the headlines were obviously not very inspiring. In the last half hour, we saw about 5% go off from an NLC India. Some of the ADAG group stocks like Reliance Infra were quite weak, about 4.5% down. Though Reliance Capital, by the way, was seeing some buying, at least the last time I checked. Let's just see the final rates on Reliance Capital. Okay, that also kind of turned around towards the end of it. So that's the picture as far as the key losers are concerned. Stocks like Amtech Auto, GMR, GVK, most of them under pressure. Seems no takers despite the weekend for Radico Khaitan, 4% down on that stock as well. Adani Enterprises has seen about a 4.5% cut. Interesting day for a couple of future group stocks. So Future Consumer did see a lot of buying. We were discussing that report, the Motilal report with Gautam just a while back. This is of course a stock closing down but well off the lows of the day. Some of its other peers like Future Enterprises still ending week, about 3.5% on the lower side. Again, to end it, Hindustan Copper, EIL, SAIL, a lot of these PSUs had a bit of a rough session as well. Finally, on the upside of the screen, because there were plays all over, PSU's MMTC definitely was not part of this overall drawdown because that bonus seems to be keeping people really excited. 8% up over there. Graphite was still a very good story. In fact, I think it's HEG which actually hit a fresh 52-week high today, and it's going home with gains of about 4 to 5%. Crompton Consumer has been all right. We've seen some gains on PSU banks like Canara Bank, Syndicate, or slightly on the higher side. And a decent close for Titan. Really not a mid-cap considering it's coming in the Nifty now. But about a 1% up move on Titan as well. So very, very different and mixed trends, I guess, on the mid-cap side, Anuj.
Oh, yes. This move on HEG is... I don't know what to say. You have this app called Time Hop, right? It tells you what you did last year, what you did 2 years back, what you did 3 years back. I think you should put HEG's chart on that and see where it was. From 130 thereabout.
But the commentary has been very, very strong, and we spoke with the management as well. They're saying that graphite electrode prices are still trading at above $10,000 a ton. So when the company tells you that, what do? I guess the market just has to just listen to it.
Oh yes. Final thoughts then, Prakash, on this one. HEG just keeps making new highs.
Yeah, so I remember Tuesday morning you got Mr. Junjunwala on the show when I was on Bazaar, and Sonia was asking whether this could continue forever. So I don't know about ever, but for the time being, $10,000 plus is the rate that seems to be at least lasting for at least the next 2 quarters. And the China situation doesn't seem to be in any way weakening that or mitigating this bull run. So I would believe, yes, you could probably see new highs continue being made on HEG.
Okay, Prakash, have a good weekend. Of course, we'll talk to you next week, perhaps. Prakash Gaba, final thoughts from you as well on the market on Monday. What are the levels to watch there?
I might tend to agree with you. The 200-day moving average is at 10,158, and today's low is around 10,200. So just maybe around 180 was the low today. Just 20 points out. Quite possible we see a gap down and may recover some here. But this rally, I would suspect this rally up until the 10,650 is taken out. So all rallies until 10,650 are still shorting opportunities to me.
Okay, and Mitesh, from your point of view, do you think time has come to cover shorts, or is there still a weak market for you?
So we have covered shorts partly, not fully. I think given the fact that we are back to 200-day average, now fresh shorting logically should happen once we break the 10,150 zone, which is the 200-day average area, and then look at levels of possibly 10,000 to be tested. Having said that, I think it will be the key event to watch out for the next time. I think in case the second time 200 average holds, then I think clearly people who are trading more or the bull side of the market will get a lot of comfort from that fact, and we could again possibly try and attempt 10,400 on the upside. But if that breaks, then I think we are looking at a test of 10,000. So it's clearly a 200 average trading pivot which we'll watch for the next couple of days.
Let's talk about commodities, and I spoke with Manoj Dwivedi, who is Joint Secretary at the Commerce Ministry, and the first question that I really put him on was the gold issues in the Indian market. Of course, it hasn't been easy for the industry after the bank frauds and also LOUs being suspended in the sector and the industry for that matter. But how does that really impact this sector, and what can we really look forward to in sense of gold policy is what we have asked him on.
The biggest challenge is obviously any policy, it's like a tool. A tool can be used and it can be misused. So the biggest challenge is to see to it that any policy directive or any kind of ecosystem that we are thinking of should not be misused. Because if that happens, then it does a lot of damage. Especially when we are talking of gold, where we don't produce majority of the gold.
Right.
So we import it. And if we import it and then misuse it, then obviously it comes heavily on our current account deficit, on our foreign exchange earnings, and so many other aspects to it. So therefore, that is probably the biggest reason that we have to be very cautious, and it is taking time. The second is, as you know, having a vision and certain policy requirements is one thing, but implementing it on ground so that it is practical and it is effective is a big challenge. So all these aspects, because if we come up with a policy which is not practical, which is just a wishful thinking, then also it won't be appreciated. So we have been looking at the practical side of it, and that's a big challenge, and therefore these things do take time. And for the first time actually something like this is happening. So therefore we should give sufficient time to it so that what we come up, which is going to be further evolved in the times to come, has to be the best.
And something that doesn't have to be rolled back on a later stage. That doesn't leave a very good taste.
Yes.
But, you know, about government taking some time, government missing dates is something that we have seen very often. The hallmarking was supposed to come on 1st of Jan. We hear that the gold policy is supposed to be coming by 31st of March. That date perhaps is something that we might miss yet again. Would you say that, one, of course, there's a lot of work being done, the stakeholders are being asked questions. How much time, what would need to be done from here on to ensure that we at least have the regulations in hand, because the implementation part, of course, comes later?
In fact, there are 3 stages to it. One is the intent, the directives. They are ready and I would say, we already know them. The second is actually detailing. Now, if we take and the third is implementation. If we take example of hallmarking, hallmarking is something which the Act has come in, so we can say that the first stage has been very clearly laid down. Now the rules are being framed. Now the rules are something which will convert into implementation. So therefore they have to be very carefully implemented. So therefore some time is being taken. The second challenge with respect to hallmarking is that in a huge country, in a varied country like India, where most of the sector is unorganized, we presently have only 600 hallmarking centers.
That's true. Yeah. So
there are many cities, small cities and towns, which do not have access to a hallmarking center. So we don't want to create a situation where it becomes a bottleneck, especially for small traders and small retailers. So therefore we thought probably it has to be done in phases, and a parallel capacity building of coming up with hallmarking centers, of getting people who are trained in handling such things. For example, we do not have sufficient number of assayers in this country. So we are also launching training of assayers in parallel. So when all this will converge, then I think we'll be more geared up. So therefore, our probably objective today is to do it in phases. Now that is being worked out, and therefore the rules are being cautiously framed, and I'm sure very soon these will be out in public domain.
The industry hasn't had it easy. I mean, starting with those bank frauds that we saw last month, and of course the LOUs being suspended after that. So even when we talk about gold policy or a spot gold exchange or a gold board, there's a lot of apprehension when you look at various stakeholders. There were questions today about how disruptive this can be, and perhaps the smaller dealers, smaller jewelers would be wiped off, which has been the case since we saw the GST or the organized trade come in very strong. How are you relating to this? How are you dealing with these apprehensions?
No, I must say that one should not be very apprehensive, although some stringent measures have to be taken when such instances happen. But there would be no irrational curbing of credit to the small and medium enterprises working in gems and jewelry sector. They have to be assured that their business will not get affected. By and large, it seems this one incident has given a bad name to the industry. So if this industry does take some steps and moves forward, then it has to roll back on its reputation again and again, so which is not good. So therefore, definitely I would say, yes, the industry has to now work hard. They have to meet the banking associations, the RBI, the people from government, and tell them that they would in future ensure that such instances don't happen in the industry, because the first check has to come from the industry.
Sure.
And if they don't want a very stringent regulation from the government, because we are now evolving into an era where self-regulation is the best regulation.
Well, absolutely. Self-regulation is the best, or else the government is coming out with stringent measures, is the statement coming in from the Commerce Ministry, of course. But there has been lots of movement in the commodity prices, and to take that forward, we are now joined by Fayaz Hodani of Kotak Commodities right here in our studios. Fayaz, hi, good to have you. What is your sense, first of all, in the gold prices? Because while, of course, we've seen plenty data come in from the global markets, the domestic market demand would soon start picking up. Are you coming out with a buy at these levels?
Well, Manisha, I think the market has been range bound, 1310 and 1340 in the international market. Compared to that, our markets have been relatively more volatile because of the rupee fluctuation. But the broad trend is as of now not clear. So I think the market is still sideways. But saying that, in the range also we would go on the sell side. We recommend to go short on the April active contract at 30,350. Targeting around 30,200. The stop loss would be 30,470 for this strategy.
Any positive cues coming in from silver, or are you equally bearish on that as well, Fayaz? Because for the longest time, and the best of reports are suggesting good times are here to come for silver.
Well, I would wait for silver to give me a signal to buy. As of
Okay.
now, the signal is not there for buy. No doubt it is about bottom fishing or trying to catch the bottom, but I would wait for the confirmation on the charts. And the broader market also, if you see, is on the sell side, most of the commodities. So I would not be in a rush. As of now, for me, most of the commodities are in a trade. So I would still wait to buy on silver.
You know, with just 1 month to go for Akshaya Tritiya, we hear noises from on ground on how they would start making inventories now. Would that be a period to look forward to, or are you expecting any physical demand to pick up by then?
Well, as far as trading is concerned, as a trader, you should not buy when retailers are buying. You should rather buy when retailers are not buying. So during the festive demand, it is not a time for traders like us to buy. We should rather wait for the off season, probably before the monsoon season or during the monsoon season, where the time gold is actually at the bottom, and that is a good time to enter from a longer term perspective. So my take for the traders perspective would be wait for a good level to enter on long in golds.
So watch the prices and not the dates when you're looking to buy gold. Faz, also, how are you looking at the metal prices? Because while of course we have been looking at the US import tariff impact, the China winter season is ending, the next quarter construction would begin with a very strong emphasis. Are you looking at all of those factors making positive moves here?
Well, I think there is clearly a trade war which is happening worldwide. There is no doubt about it. Every country is trying to take its own pie. Talking from the commodity market perspective, I think in industrial metals, zinc is a commodity which has given a very good rally over a period of time. Now it is actually on a declining trend. We have seen the inventory picking up on the exchanges by 60%. So I think it's a good sell right now, zinc, from our perspective. I think the active March contract should be sold at around 212 for the target of 210 and 209.5 immediately, and with the stop loss of course 213.1. And one more commodity on the industrial metal would be aluminium, where of course the China cut is going to get over in mid-March, and going forward the production and the supply is expected to pick up, and therefore we are again bearish on aluminium. We recommend to sell at around 135.50 for the target of 134. The stop loss for this strategy would be 136.30.
All right, Fayaz, you spoke about 4 commodities and all sell calls came in from that. But thank you so much for joining us today in the studios to talk about the commodity space. But with that, it's out of time on this edition of Closing Bell.